Everyone, also, Stranger Things is turning out to be a bright spot in Netflix's dismal quarter. The streaming giant's self-reported viewership numbers show that Stranger Things was its best show of the year, beating out other hits like newly released hits Ozark and Peaky Blinders. Joining us now to break it all down is Yahoo Finance's Ali Canal. Ali, great to see you here this morning.
Great to see you too, Brad. And yeah, Stranger Things could be the bright spot for Netflix. The show continues to break records here, even surpassing the expectations of Netflix itself. That's according to sources at Bloomberg. But the big question here, guys, is whether or not Stranger Things will be enough to offset that subscriber decline that Netflix has forecasted. Netflix said it anticipates that in Q2, 2 million paying users will leave the platform. And if that happens, that would be the biggest quarterly decline for Netflix in the platform's history. And third-party data out there, the signs are not good. We're seeing increased levels of cancellation, churn, a slowdown in app downloads. And this is happening across the board. Just this morning, Morgan Stanley downgraded shares of both Paramount and Fox, citing a, quote, possible streaming recession. If we look at shares of Paramount, Warner Bros. Discovery, Netflix, since mid-April, they're down more than 25%. Netflix is by far the worst of that pack, with shares down over 70%. So I think right now analysts are really looking for tangible action from Reed Hastings and the Netflix leadership team tomorrow during the earnings report and really the earnings call. What can we expect? We have that ad-supported tier that's expected to roll out at the end of this year, but we heard last week on this program from Laura Martin from Needham saying that she does not anticipate that timeline will work out. So a lot to watch for Netflix, a lot of macroeconomic concerns and headwinds like foreign exchange pressures, inflation, competition. But the word on the street is that it's going to be a pretty disappointing quarter.
And that subscriber chart we just showed, Ali, really explains why you now see Netflix shares down about 70% year to date. But switching gears, inflation, a hot topic always in the 9 to 11 show. And speaking of inflation, ESPN hiking prices now. What's up with that?
Yeah, they're going from $7 a month to $10 a month, or $100 a year. And just to put this price increase in perspective, that's a 43% hike. So it's pretty significant, I think, in the grand scheme of things. ESPN saying that these price hikes are due to improvements made to the platform, including increased access to sports content and sports rights. We know how difficult those streaming rights can be, but I think it speaks to the larger question here that this is just not sustainable for consumers. Eventually, they're going to have to cut costs somewhere. They're not going to be able to handle all of these streaming services, and this is pretty disappointing to see from ESPN Plus. From a consumer perspective, we'll see if this impacts any subscribers there.
I think that's more than 3 times the latest the headline read on CPI. So ESPN clearly not watching the CPI index. Ali Canal, thanks so much.
Thank you.